Welcome to Security Token Insight, brought to you by the Security Token Academy. The security token industry is here and will provide a key foundation for the evolving financial internet. The Security Token Academy provides insights about this new era for security token enthusiasts, investors, and issuers. The security token industry is here and you can still get involved. Hi, I'm Adam Chapnick, and here we are in another episode of Security Token Insight in the first half of 2020 during these unusual times. We are coming to you yet again remote, and we thank you for joining us. We're committed to providing you a ton of actionable intelligence and news all about the security token industry. Thank you for being here. Coming up on today's episode of Security Token Insight, in your security token investing news, BitGo acquires Harbor. We have the second part of our expert interview with CRONIN, Vice President of Business Development at Prime Trust, and hear from Marc Boiron in our Security Token Stories podcast. That and more is coming up on this episode of Security Token Insight. Now it's time for your security token investing news. Up first, Fatburger just got a little fatter with a $40 million infusion. The new capital arrives via securities issued on the Ethereum blockchain. Fatburger's new raise is also the first time that securities issued on the blockchain have been rated by investment ratings company DBRS Morningstar. Fatburger has a goal to raise a total of $500 million by the end of 2020. Next in our news, Coinbase appears to be one step closer to gaining an operating license in Japan. Coinbase has joined the Japan Virtual Currency Exchange Association, which is the country's self-regulatory organization for crypto firms. Their new membership is listed as a second-class member, which indicates that a business is, quote, applying for or planning to apply for a virtual currency exchange registration, unquote. And finally, BitGo has acquired security token platform Harbor. The new deal will enable BitGo to establish itself as the first full-stack services provider in the digital security sector. The acquisition of Harbor will enable BitGo to provide all the elements of a traditional financial system. The new company structure will be divided into three categories of service. 1, qualified custodian securities on behalf of a client. 2, broker-dealers trading securities for self and for clients. And 3, transfer agents who help record all transactions. By the way, Harbor is a gold corporate member of Security Token Academy. To learn more, go to our website, securitytokenacademy.com, and click the Directory tab and select Corporate Member. Have you listened to our latest podcast? Be sure to check out our Security Token Stories, featuring the one and only Derek Schloss, as he sits down for one-on-one interviews with security token industry leaders. Derek recently sat down with Fisher Broyles attorney and partner Marc Boiron to discuss the SEC's recent safe harbor proposal. Take a listen.
So let's dig into the specifics of the safe harbor. Something key to point out here. Before the safe harbor was proposed, if you wanted to sell a token before a network had launched, you had to either register the offering or qualify for an exemption. And we've seen the SEC affirm that stance a number of times over the last few years with blockchain networks, whether it's through settlements or speeches or actions. And one thing I found interesting with the safe harbor, Mark, was I think it appeared to say that even brand new initial token offerings could rely on this safe harbor carve out, which would exempt the offer and sale of tokens from the Securities Act and the Exchange Act for a specific time period. So can you walk through exactly what the safe harbor is proposing, kind of what the time period that Commissioner Pierce is suggesting, and maybe just your initial opinions on kind of reading through this and some of the things that it implicates for you?
Yeah. To your point, she cites the Blockstack Reg A offering as an example of just the issues that all of this creates. And, there's multiple $1 million that Blockstack spent to be able to sell its tokens. And I mean, frankly, it's just not acceptable to me to spend that much as an early stage company to distribute network tokens. Not something that was clearly, just something that was to raise money, but would actually had intention kind of intended to be used in the network, maybe not by all the buyers, but it actually had usefulness to it. Regardless, her proposal essentially, the biggest point about it is it exempts any token sale from registration or needing to rely on an exemption. Actually, it makes it an exemption under the Securities Act. And so typically, when you are relying on an exemption under the Securities Act, it comes with a lot of restrictions along with it. Most of those are transfer restrictions, or they're substantial disclosures, or they're restrictions on dollar amounts that can be sold. But we really don't see that in a major way here. What we see is, okay, you're going to be exempt if you meet certain conditions. And so one of those is, hey, the initial team that's doing the development of this network needs to actually have the intention of creating a network where these tokens are being sold are going to be functional within what she basically says is 3 years. She calls it the network maturity. And within 3 years, you need to have reached network maturity. Obviously that 3 years is a completely arbitrary number. On top of that, if you look at, some of the more successful networks, and Ethereum's the easy example, we're much past 3 years right now. And I wouldn't say that, Ethereum, the Ethereum Foundation, or anyone who, was initially involved with Ethereum, thought that it would take this long, or that they've actually achieved what they thought they were going to achieve, back then. And so, 3 years is a very arbitrary time frame. It's pretty long, but when you're talking about creating a network that is intended to be used by a broad range of people, and then essentially nobody has control over it, to me, 3 years suddenly starts looking really short, actually. It's not that long anymore. But given the framework that Commissioner Pierce decided to put out, it's essentially, she chose to pick kind of a date. Another thing that was kind of important is, on top of that, you need to make certain disclosures. Now, this is something that I've personally been harping on for a while, is this idea that, we're supposed to register offerings or file a Form 1A and follow the disclosures required with traditional securities, when it really doesn't make any sense, is kind of problematic. And so, here we have she's kind of laid out, what it is that we'd have to see in terms of disclosures and things like your source code, transaction history, token economics, plans for development, things of that nature. I think one of the things that is underdeveloped in what she's put out is this concept of kind of governance during that time period. Now, partially it's because, she views it as there's still a centralized entity that is intended to take certain actions, but, token holders are at the whim of the centralized entity. And so they should probably have some kind of say, almost like a shareholder would of a corporation. And so, that's something that wasn't focused on as much, but nonetheless, she talks about the disclosure requirements. Basically, then she says, the intent of when you do this, like your purpose is supposed to be the development of the network. Like that's what why you're selling these tokens. Again, that makes a lot of sense given her goal of, we want to make it possible to develop these networks. And that's literally the only reason. I also think that's something that's been underlooked by a lot of folks who've been commenting on it. I think you could go a little further in terms of restricting the language that she's used, but the fact that it's supposed to be sold for that purpose kind of indicates that maybe selling millions of dollars worth to a VC isn't going to be compliant with the safe harbor, because it's not clear that offering and selling that many tokens is for the purpose of the development of the network. Now, that could also just be a question of language. Maybe the answer is, well, if you're just using the dollars to develop the network, then it very well could be, in which case it would be fine. And then the last point being that you have to file something. You do have to be relying on kind of the laws. You have to be complying with other laws, which makes a lot of sense. But on top of that, you have to develop a secondary market for the token. And this is probably the most controversial point, other than the 3 years of the whole thing. Because historically, if you go ahead, and it's been one of the things the SEC's pointed to frequently with respect to ICOs and other token sales, is you actually went and listed your token on an exchange. that clearly showed that people had an expectation of profit. Otherwise, you wouldn't have done it. And so now, this proposal says you're going to go ahead and actually list them on the secondary market. Now, I get why there's a lot of pushback on that. What I'd also say is that it achieves one of her goals, which is how do we get tokens into people's hands? But the corollary is how do we let people actually monetize those? Because if you've got miners on network and you've got developers on network who are getting tons of tokens and they literally cannot do anything with them, I really don't know how many of them are going to stick around for very long. They need to be able to sell them, or they're not really going to be, able to live in the current economy that uses US dollars. And so, I understand the reasoning behind that. I'm not sure this is the best way to execute it, but it makes a lot of sense in terms of what she was trying to achieve.
Go to our website, securitytokenacademy.com, click the interviews tab and select podcast to listen to the full episode. The Security Token Academy is proud to present an expert interview with KINSEY CRONIN, Vice President of Business Development at Prime Trust. Prime Trust is an SEC qualified custodian for security tokens issued using the ERC20 standard. In addition, Prime Trust compliance services include KYC AML and bad actor checks. We sat down with KINSEY to discuss Prime Trust's new service, Prime Pay. Take a look.
So a lot of different companies in the space that do different things are concerned specifically kind of micro about their blockchain. They do stuff here, they don't do it there. Yours is no good, mine's great. Do you guys support only ERC20, or do you support a bunch of blockchains, Ethereum only, other blockchains?
Well, of course, we also custody Bitcoin.
Bitcoin.
And there are a number of other blockchains that we can work with in limited capacity. And the good thing about Ethereum and ERC20 compliance is that most new tokens are coming out that way, especially in the security space. And there are just so many of them that we can cover a lot just by covering ERC20 compliant. That said, we do get requests all the time for new protocols, and we take them all seriously. So there are, as I said, there's a few that we can, just because of the way our systems work, we can custody. And then as requests come in and there's volume and promise, we're always willing to consider custodying a new protocol.
Right, nimble, as you said. So you mentioned that the industry, the security token industry, which is what we are focused on, you were talking about how much it's evolved and it's always changing. Where do you think it's headed?
I think I haven't changed my mind about where it's headed, right? So to me, I think there are a lot of people who agree. It is not the securities industry isn't going to change in every way, right? It's not going to be taken over or replaced. I think a lot of these back-end systems are going to be replaced. It's going to be a way of cutting out middlemen, a way of making things faster and more secure. So I do see tokenization taking over as a means, as a way of holding securities or representing them. The same way that the book entry digital system took over actual pieces of paper, right? So I see that being the end direction. There's a lot of incredible ideas out there. I think that they can't all win, right. And I do think that the system we end up with won't look that different to the sort of average person from the system we have now. It'll just be running on a different computer system, basically.
Interesting. So you're of the mind that the big, the sea change is going to be under the hood.
Totally.
Yeah, that's interesting because I agree with you. So do you see any, I always love asking this, any trends? Because you guys get to see things that actually are happening, whereas we get to kind of talk about what we think, but you're in it. Do you see any tokenization trends that are actually happening? Any interesting kinds of assets that are tokenizing or even not interesting, but that are trending where more people are using it than others?
I see a lot happening in real estate. And I think real estate, just in what we do so much in real estate. I think it has made real estate which many people think of as a great investment, more accessible to more people. Because when you can split that up more easily, and you can offer smaller pieces to more people, and that's tracked properly, and those can be traded, and there's liquidity there, I think that is definitely a trend that we're seeing. As far as other trends just generally related to tokenization, I would say, you know, there isn't a trend. Everybody has their own idea.
Yeah.
So you never know which one is going to win out.
So what sectors do you think could benefit from tokenization? Not knowing what's going to work out, but where is there anything that you've been thinking, gee, that's an interesting possibility?
Well, right now we're seeing a lot of interest from the sort of more difficult to bank industries. So adult and cannabis, those industries, they're looking for more solutions. So I think they're probably likely to lead the way in some cases because they have fewer options. They're used to paying a lot in fees. So if they can find better solutions for their own like banking and you know, security services, they're going to be more open to them early.
We have the full interview with KINSEY CRONIN on our website. Be sure to check it out. By the way, Prime Trust is a gold corporate member of the Security Token Academy. To learn more, go to our website, securitytokenacademy.com, and click the directory tab and select corporate member. Did you know that you can get the latest industry updates in our free weekly newsletter, the Security Token Edge? The newsletter is packed full of insightful information about the security token industry. To subscribe and get your free weekly copy, go to our website, securitytokenacademy.com. We also invite you to check out the Digital Wrapper on Medium. It's our behind-the-scenes series with the teams building out the security token industry. These are in-depth interviews covering a wide variety of topics. You can view these when you follow us on Medium. You can find more information on our website, securitytokenacademy.com. I want to remind our viewers that if you have any questions about security tokens, be sure to email us, and we could answer them right here on a future episode of Security Token Insight. The address is insight@securitytokenacademy.com. Be sure to include your name with your question. One more time, the address is insight@securitytokenacademy.com. You can also learn more by visiting the Frequently Asked Questions page on our website by clicking on, of course, the FAQ tab. Our Frequently Asked Questions page is packed full of security token industry terms and concepts. To prove it, today's term of the day is automated compliance. Automated compliance. Today, regulatory compliance for securities is typically documented through a series of separate ledgers, each constructed by entities that facilitate issuance and/or secondary trade. Only through a reconciliation of these segregated ledgers is ownership and compliance legally validated. With security tokens, which are built on a model leveraging transparent and immutable blockchain ledgers, regulators will have a far easier time keeping track of compliance issues, system manipulation, or fraud. Got it? All right, that's it for today's episode. Be sure to follow us on Twitter, Facebook, Telegram, and Medium. And don't forget to subscribe to our YouTube page so you don't miss out on any of our videos and expert interviews. And a big thank you to all of our Gold corporate members as well. We invite you to learn more about our Gold corporate members by clicking on the directory tab and click Corporate Member. I'm Adam Chapnick. For everyone here at Security Token Academy, thank you so much for watching, and stay sanitized.
You can watch all episodes of Security Token Insight on demand. Visit securitytokenacademy.com, click on the Insight tab, and select Insight Show. It's just that easy.